صباح الخير، كل سنة وانتم طيبين. النهارده آخر محاضرة في الادفانسد اكاونتنج. فالجزء الأخير ده طبعا داخل معنا في الامتحان اللي هو بارت 5. فأنا النهارده هديكم بس ملخص بسيط ليه، وهأدي نسخة كاملة من المحاضرة لأستاذة هبة فهتساعد معك. فهبدأ الجزء ده بالذات، الجزء النهائي آخر حاجة اللي هو بارت 5. الجزء ده بيتكلم على البارتنرشيب، فلازم نكون عارفين الأول البارتنرشيب عبارة عن ايه؟ التكوين بتاعها، الفورميشن بارتنرشيب، والاوبريشن and ownership changes and liquidation. That's what we have the partnership. Basic issues in this one. First, you have to know the nature of partnership. What's partnership? What's the difference between partnership and corporation and the solo company and other companies? They have some differences between all of this. You need to know all of this from accounting 1, accounting 2, and the company. And when we talk about liquidation, we talk about how to liquidate the partnership. When we come to practice, accounting for partnership, we have 3 issues. Formation, how to form it. If you have a partnership, if you have a company, some 2 persons, they make the company, they establish the company together, and they like to form, establish. They need to have other regulation they need to follow, but in accounting, we talk about accounting and partnership for partnership formation, number 1, how to establish, and operation, when you operate to work, daily working, and ownership changes. After this, accounting for partnership liquidation, that's other issue in this one. After this, we have a statement of partnership liquidation and single step distribution, and installment distribution. After this, partnership formation operation. For this one here, we're going to start with, you have to know what's a partnership. Definition first. It's an association between 2 people. They establish the company for reason, economic business companies. Any kind of business they do it. You can see the lawyer, other group people, they do this company, accountant, they do this kind of business, or some other group, 2 people or more, they do this. After this, the nature of partnership. Remember, when I say the nature, we talk about limited life. Mutual agency means each partner as an agent, he can sign the paper, he can take care of the company. Okay. Unlimited liability, that means they have to all obligation they have to unlimited, and co-ownership of assets and income. That means we call this ownership uncommon. That means between all the partners. When we have a type of partnership, we have a limited liability or unlimited liability. Okay. I'm going to start with in accounting now. The first one, very, very important. You need to know how to establish the partnership. If you like to do partnership with your friend or relatives, you have to know how to establish this one. Okay. Start with formation first. Number 1, formation. For formation, you need to start with money, capital. Do you have capital? Do you have money to invest? That's number 1. That's number 1. To form any company, or especially partnership, any other company, you need to, do you have investment? Do you have cash? Do you have non-cash? Do you have all of them? Do you have assets? That means we call it initial or investment or original investment. That's the beginning. That's the beginning of your business. In a partnership, recorded in capital account for each partner. After this, we have this one here, we record it as a debit, cash, and capital. After this, we go for, that's journal entries for this one. And non-cash, sometimes they do non-cash, such as land, inventory, all of this. Also, we need to record it, what's the debit, what's the credit. Remember again, debit and the credit, sometimes it change here with this size of this writing. But anyway, I will send the copy, have the copy to Heba to give you for this one to put for you. Okay. After this, we interest in partnership capital. Case 1, they have interest. This interest they take interest percentage of the capital. How much is it? Assume 80, 20, 80 to be A to A and the 20 to B, or the other one, that's agreement. If they have the agreement equal to the capital, the contract between them, that means there is no problem with this one. If you have a differences between these two percentage, what we're going to do, we'll have a percentage. Look at this one here. We have this one here for A, that's 80%, and B 50, and this one here, we have to look at this one. That's in case of differences, we need to must choose between two accounting methods, bonus method or the other one, we call it goodwill method. When they give you bonus method, that shows you why is the bonus and who's going to take the bonus, which partner. If you look at here, that's partner A and partner B. After this, we have a goodwill method. What's a goodwill method? Okay, we need to, the same journal entry under goodwill method. We have to write how much a difference, 30,000. That's why I put this as a goodwill. Okay, and the other thing for formation, you need partner drawing account. Sometimes the partner he takes some cash for personal reason or any kind of reason. Is not for the company, that's for his personal. We call it partner's drawing account. For each partner, we have this account. He can add this one. All drawing reduces the capital, and the profit increases the capital. Remember this in accounting. Okay. Cash and the other asset from the partner. This one here, assume the partner A withdraw, assume he withdraw 5,000 cash for personal reason. What you're going to do with this one? Journal entry, of course. You're going to debit drawing and the credit cash. Okay, just type of size of this thing in you. Okay. After this, we go for assume partner A withdraw cash and the goods at purchase price and the goods at selling price and service provided. This one here, journal entries, the same, debit, drawing, and the credit, all of this cash, how much, 5,000, inventory, 4,000, sale. This journal entry, it's mixed up with this big size of this journal entry to close. If you want to close we close the drawing. That means close it. I'm going to debit capital and the credit drawing. And after this, we have accounting for operation now. That's enough for formation, the company, partnership. For operation, remember again, we have formation, establish the company. Second issue, partnership for operation. Excuse me. In general, they do the operation like any other companies. They can provide service, they can sell any goods, they can buy any goods, but they record everything in general journal and general ledger. The same like any other companies. And at the end of the year, they have to prepare financial statement and financial report. This one here, income statement and balance sheet, the same like any other companies. Also, partnership income or loss is allocated to partner capital account based on a specific ratio. Sometimes they said, okay, we between 2 to 4 or 1 to 5. They have to write this agree in the contract of the company. Also, capital invested. This one based on the capital invested at the beginning of the year or middle of the year average, and service contribution basis as reward, bonus, or extra salary. In case of partnership income deficiencies here means not enough money. Sometimes they have some problem with liquidity, not enough money. What they're going to do, they have to look at it. This, if they have a loss or deficiencies, not enough money, not enough cash, they can do allocate it between the partners according to the ratio 1 to 4 or according to the ratio between them. Also, pay the salaries and interest to the extent that's enough to the salaries and the extent. to the people here, to the partners. The last one, account for partnership changes in ownership. What do you mean by changes? Changes here means sometime admission new partner. That means partner A and B, they're going to have a new partner. That means we have A and B, they're going to admit new partner. And this new partner has cash or non-cash, or the new partner, he's going to buy interest or percentage of other partner. That means they're going to something between two partners, or the other one with withdrawal or death of all the partner. Okay, this one, that's the cases. We have example for admission of new partner by investment. What you're going to do, A and B, they have admission. This, I told you this one here, partner C, you remember, we have two partners, A and B. Partner C provide assets and the liabilities. That means journal entry for this case. After this, we have to record it, debit, credit, the same ideas with journal entries. What about admission of new partner by purchased interest of all the partner? That means you're going to buy some from the old one. We're going to assume A and B accept new partner C by acquiring this one here to give you this one. Journal entry, this one is debit, the same debit and the credit. I keep this with you with Hiba. She's going to put hard copy for you in more details. Note, if the admission of new partner creates a new business entity, that means you're going to establish another company or different name or different business. In this case, we need to make adjustment from the book value of the asset and liabilities to fair value. If the new partner's capital not equal to the percentage of they talk about it, in this case, they have to use this one here. They use bonus method or goodwill method. Okay. Example 3, withdrawal or death. When you have some of one of the partner, he get out of the company or died. In this case, assume partner be withdraw from the partnership. What's the journal entries for this one? Partnership will be more than book value, or this one consider as a book. Also, I give you more example. Another example will help you. This very important example to you at the end was this one. Example 1, they give you example 1, what between two partners, and they give you journal entries is not here with the size of the typing with this here, something happened here. And the land, all of this, they give you this information, and when you have journal entries, you know what's debit, what's the credit, okay? All of this for record, all of this recorded, and after this, we have, that's journal entries, all of this, and example 2, refer to example 1. That means go back again to example 1, that's example 1, and assume partners agree that each partner will get an equal amount. When they have an equal amount, we need to know what's the difference between what's the equal amount, what is it, how to calculate the equal amount between the two partners, okay? All of this, it's written to you. I will send it how to copy to Hiba, give you more details about this examples, how you do it. After this, we have another example here. I gave it to example 3. Refer to example 1 again. All of this, example 1, to refer to example 1, missing number 1, assume that each partner to contribute equal amount using goodwill. That means we have goodwill method or bonus method, the same ideas, okay? And they give you total capital before the agreement and after the agreement. You have to know this. And journal entries, you have to know what's the debit, what's the credit, the same with this one. Example 4, that's a new example here. On January 1st, 2017, the capital of partner A was credit balance was 120,000, and the capital of partner B was credit was 80,000. At the end of the year, the net income was 60,000. The partner agree each partner receives 20% interest on the beginning of the year capital, and anything remainder is divided between A and B. They give you ratios 6 to 4. Remember this respectively. That means 6 to A and 4 to B. Prepare a schedule to show the allocation of net income. That means we're going to show the schedule here. And for this schedule is not clear because the size of this typing here, and at least will and at the end, journal entry to record allocation of partnership net income, and journal entries again. And this one here, account for partnership liquidation. This part, that's only for reading. You're going to look at it, read it. Is not included in the exam. Partnership for liquidation, account for partnership liquidation. Just to give you what to mean in theory. What do you mean by liquidation? What is it? But there is no examples, no exercise for the exam. But at least you know what theory about this one, what's the liquidation, how we're going to do it, and I give you some example to explain this. Just learning, you need to know this. What do you mean by liquidation? Then I think that's enough for partnership, and we focus on this one here. Liquidation is not included. That's only for reading or theory, and not included. And we finish this part. I think that's enough. Thank you very much, and wish you good luck. By the way, you did a good job with the exams, and I give you more details before the final. Give you more details about this exam. Hiba will send it to you. Thank you, and wish you good luck, and see you in the exam or before the exam. If we have some time, we can talk about it. Thank you very much. Have a nice day.